Why food prices could go even higher. This has been the theme for the last several months. Of course, the food portion of inflation has been high for the last 2 years as inflation has rose, peaked, and then come off. But a lot of people harping on this food part of the equation, because even though inflation has gone here in the US from near 0% a couple of years ago around the start of the pandemic, peaking to 9% in the middle of last year, and now coming off, and you can see in that first column there in that maroon red color, coming off to about 5%, about half of where it was at its highest level. Food inflation there in the blue is still at about 8%, and it's the most significant part of the CPI or inflation rate calculation here. It's been the stickiest part of the major categories, and you can go at the U.S. Bureau of Labor Statistics. You can go even deeper into the food portion and see, how it's pretty interesting. But I didn't want to go too deep here because I wanted to bring this back to trading and let you know why they're still up here and where they could be going even higher here as we bring in some summer seasonality to the agriculture equation. But yeah, you can go even deeper into that at the U.S. Bureau of Labor Statistics website and compare the price for eggs to bread to a bunch of different things. It's very, very interesting. But I want to keep it, though we've gone deeper into inflation here and seen that food is the biggest piece that's keeping inflation relatively high. As you see, energy is showing deflation, so to speak, but that's mostly because crude oil and energy prices in general went to, I think it was like 20 or 30-year highs last year. And so they're normalizing, but that's showing as deflation here. But food, obviously, the part of inflation that is sticking around. And we see it in our supermarkets and in our restaurants that food prices have stayed quite high, even though the price of gas at the pump has come significantly lower from its heights. And so, what goes into this? Of course, there's a considerable amount in the meat production part of this, and there's been a lot of talk of how the loss of a bunch of chickens from recent bird flu and stuff like that has driven the price of eggs higher. But also it's been agriculture markets in here. We've seen very high relative to past years, very high prices for corn, soybeans, and wheat. And you see in that gray price, wheat has actually come off significantly, which will factor into a lot of your breads and cereals and what have you. And we're still seeing this high food inflation here. Where can we go? Obviously we can get back to the heights of 2022, but you compare where we're at to where we were at in 2020, we're at very low prices for corn and soybeans and wheat at that time, and we're still above those prices. But especially in wheat, we've seen a lot higher prices, and we are approaching, I bring this up because we are approaching the seasonally volatile period for these agriculture markets. It's no coincidence that you see the spikes in prices here occurring in this 3-month chart. If you look back to the most recent spike in prices, I'll be damned if that doesn't occur right around May, June, July of 2022, the spring to summer months there. You go back 1 year further to the second most recent spike in prices for agriculture markets. And again, right around May, June, and July, falling lower there in September of 2021. And now we find ourselves right in that same time window. We're here in May, getting into the seasonally volatile time of the year. And here I have the option prices, the option volatilities, that is, for these three agriculture markets. And you can see that wheat volatility peaking right now here in May and due to come off lower in the coming months. Corn and soybeans both showing the most volatile time and their option term structure here being July and August, and then falling back in the October-November period. This is the what's called growing and harvesting part of the year for these agriculture products, and that's what brings the volatility along with them, and that's what you've seen historically has brought these spikes to the prices for these products that go into the food products that factor into inflation. And now, all of that being said, this volatility that is, the option market is projecting that historically we have seen around this time of year doesn't have to go in one direction. It doesn't just have to go up. Agriculture markets, though they're projected to be more volatile, and though historically they've been more volatile this time of the year, and historically the last couple of years, that volatility has been in the upward direction before coming down in the fall, that's not guaranteed. You could see this volatility occur in the opposite direction. And I mean, that's, kind of to my point here. Of course, you look at that wheat chart and you look at the time of year that we're approaching here with that gray line, and you would maybe say, wow, this market has fallen significantly since last year's seasonally volatile period around May and June. This market's due for a jump higher, and that could obviously press our food prices a lot higher. But wheat still was lower than where it is now in 2020, and corn and soybeans are still much higher than they were in 2020 as well. And so there's room that they could cover to the downside. Of course, if history the last couple of years is an indicator of what occurs this year, which it is not, then we could see these food prices climb back higher again, higher than they already are at around 8% inflation year over year. But also, I brought up that energy piece as well. You could see food go the way of energy here in inflation, bringing us back down to a net inflation that is closer to 0%, or at least 2%, where the Fed wants it. Because, we just saw energy make this case for agriculture markets to potentially come down to a more normal price. So, of course, could food prices get higher, could get a lot higher? Absolutely, especially if the agriculture market volatility that's due to come here in the summertime is to the upside. But energy markets just went through this normalization, if you want to call it that, whereby crude oil and natural gas prices fell significantly throughout the winter of 2022 to 2023, causing the energy part of inflation to come down to actually a negative value, and food could go that way as well. Of course, we're all hoping for food prices to diminish here, but we're going to look to wheat, corn, and soybeans to tell us where they're going in the future.